Picture this. A world where your investments not only grow but pay you regular income. This is no mere dream. In the coming years, the investment landscape could be drastically altered, with high-yield dividend stocks becoming a sought-after investment option. Known for their potential to offer both growth and income, high-yield dividend stocks are quickly gaining recognition in the investment world. The performance of these stocks over time has been quite impressive, outpacing their non-dividend paying counterparts. This solid performance track record has piqued the interest of investors, who are continually seeking to maximize their returns. They have become an alluring option for those who acknowledge the power of compounding and the appeal of consistent income that can be reinvested, creating a snowballing effect on their wealth. As we approach the year 2024, the focus on these stocks is projected to intensify further. A confluence of factors is spurring this increased interest. One such catalyst is the shift to 5G technology in the telecommunications sector. This technological revolution is expected to ignite unprecedented growth in companies involved in the sector, making their dividend stocks an appealing prospect for investors. Additionally, the resilience exhibited by retail real estate investment trusts, REITs, is another factor driving interest towards dividend stocks. Despite the surge in e-commerce, retail real estate has managed to maintain its profitability, promising consistent returns for its investors. Moreover, the continuous progress made by pharmaceutical companies with their innovative research and development of life-saving drugs also contributes to the increasing of dividend stocks. Moreover, the current competitive yields of treasury bonds are pushing investors towards high-yield dividend stocks, which offer relatively higher returns and regular income. This shift in investor preferences is setting the foundation for a potential surge in the popularity of dividend stocks in the coming year. All these elements combined indicate a prosperous time ahead for high-yield dividend stocks. The stage is set, the factors are aligned, and the potential is enormous. Investors worldwide are gearing up to capitalize on this imminent investment boom, seeking to enrich their portfolios and maximize returns. In conclusion, the future seems bright for high-yield dividend stocks, with all signs pointing towards a golden era. Are you prepared to navigate through this dynamic investment landscape and reap the potential benefits? Buckle up, because we're about to dive deep into the top 5 dividend stocks to watch for in 2024. Now that we've set the stage, it's time to unveil the top 5 high-yield dividend stocks that are set to make waves in 2024. First up, we have Verizon Communications. This telecom giant is riding the wave of the 5G technology upgrade, which is significantly boosting its bottom line. Investing heavily in mid-band spectrum, Verizon has managed to offer at-home 5G broadband, leading to increased customer retention. Despite concerns about lead-clad cables, these are largely unwarranted and shouldn't detract from Verizon's potential. Next on our list is Realty Income, a retail real estate investment trust or REIT. This company has a stellar track record of paying its dividends monthly and has increased its payout for an impressive 104 consecutive quarters. Over 90% of its total rent comes from businesses that provide basic need goods and services, making it resilient to economic downturns. Plus, it's diversifying its portfolio with acquisitions in the gaming industry. Our third contender is none other than pharmaceutical powerhouse Pfizer. With a high dividend yield, Pfizer's sales from COVID-19 vaccines have been factored out of its future revenue and profit forecasts. But don't let that fool you. The company's non-COVID therapeutics are still growing, with sales for non-COVID products increasing during the third quarter. Pfizer's acquisition of cancer drug developer Seagen is set to result in recurring cost savings and additional revenue. The fourth company on our radar is PennantPark Floating Rate Capital. A business development company, or BDC, PennantPark invests in the debt and equity of middle-market companies. Its debt-focused approach enables it to generate a high yield, as small businesses often have limited access to traditional debt and credit markets. The company's management team has successfully protected its invested assets, with a majority of its debt securities being first lien secured. Finally, we have a surprise entrant. Goldman Sachs, a financial titan, has been making headlines for its recent analysis. With the yield difference between the top 20% of S&P 500 dividend payers and the 10-year US Treasury narrowing to zero, Goldman Sachs is turning heads. While this has led to investors withdrawing cash from dividend stock funds, It suggests that bonds are becoming a viable competitor to stocks. But remember, high-yield dividend stocks still offer potential growth and a steady stream of income, making them an attractive investment option. Remember, these 5 stocks aren't just about potential growth. They're about stable, high-yield dividends that could provide a steady stream of income. But as we all know, the financial world is not a static one. Let's take a brief detour to understand the current financial landscape. Recent news has pointed out a fascinating development. The yield difference between the top 20% of S&P 500 dividend payers and the 10-year US Treasury has dwindled down to nothing. This zero gap has triggered a wave of investors pulling out their cash from dividend stock funds at an accelerated pace compared to the overall stock market. The shrinking yield difference suggests that bonds are emerging as a strong contender against stocks. This means that until the Federal Reserve begins to cut interest rates, dividend-yielding stocks might not perform as well as we'd like. Furthermore, with bond yields on the rise as investors adjust to the prospect of higher interest rates, Treasury bonds have become increasingly appealing. This shift in the financial landscape has implications for our investment choices. While high-yield dividend stocks may still be a good bet, bonds are offering a solid, low-risk alternative. So while high-yield dividend stocks are attractive, it's important to keep an eye on other investment options and market trends as well. Now that we've covered the top 5 dividend stocks to watch for in 2024 and the current financial landscape, let's quickly recap. First, we discussed Verizon Communications, a telecom company profiting from the 5G technology upgrade and its aggressive spending on mid-band spectrum. This strategy has allowed it to offer at-home 5G broadband and boost customer retention. Next, we highlighted Realty Income, a retail real estate investment trust that's consistently increased its payout for over 100 consecutive quarters. Its resilience stems from its rent coming predominantly from businesses providing basic need goods and services. We then moved on to Pfizer, a pharmaceutical giant whose high dividend yield and growing non-COVID therapeutic sales make it an attractive prospect for investors. Pennant Park Floating Rate Capital, a business development company investing in the debt and equity of middle-market companies, was our 4th pick. Its debt-focused approach allows it to generate a high yield. We also took a look at the current financial landscape, noting the increasing appeal of bonds as they become a viable competitor to stocks. This shift underscores the importance of being aware of market trends when making investment decisions. With the right knowledge and a keen eye on the market, you could make 2024 a year of great financial success. Don't forget to invest wisely and always keep an eye on those high-yield dividend stocks.